Hello, guys. Welcome to the weekly market forecast review with myself and James. Just so you know, this is not financial advice. We try our best to predict the market, and it's never set in stone. Sometimes we get it wrong, sometimes we get it right. It's what we are thinking, and it's what we're doing, and we're just sharing it, right? So, do your own research, make your own conclusions. And if you take something from us, that's great. If you don't, it's fine, but make your own decision and make your own conclusions. And most importantly, be accountable for your own results. All right. We are not liable for anyone's losses. So let's just get that one out of the way and then we can start. Okay, so let's start with the usual pairs we cover. Let's move on. Let's start with the Dixie. So we always kick off with the Dixie. And I'm not going to talk too much on the Dixie because you probably have seen some of my videos already on the Dixie anyway. But what I'm seeing on the Dixie is I think this week will go up higher because we have there's a weekly a weekly engulf plus a rejection candle here. So my target would be this box here that we go higher into this box. And the main reason is because you're going to have a dead cross, and with dead crosses, when you're going to have dead crosses, you rally into the dead cross, and afterwards you collapse. So how far would we rally into this? I don't know, but I think here is a reasonable place to be. It could come all the way up to this point here. It could, but after that, I do expect a further down. And that's the only reason because of the dead cross. Because each time you have a dead cross and you rally into it, you have a final drop. And I think that will create a beautiful divergence for us where we exceed this point here. And at that point, I think, the dollar can start going up. So that's all I've got on the dollar. And I'm going to pass it over to James to show us what he's seeing as well.
So that was a really nice fake out we saw. We had our orange trend line here, and we were kind of calling for price to drop down and use this lower as an upper. These are our blue lines. But what I'm thinking is happening is it was just a market maker fake out just to kind of trap liquidity. And I think the first plan that we had of price kind of flowing in this highlighted area is now more likely to play out. I don't think we're going to have a V-shaped recovery here, just because of, I think we usually take the same amount of move sideways. So we had this pretty aggressive move down here. So it's going to take the same amount of time to kind of consolidate that move. That's
And
how I look at these.
how long is it going to take us for us to start the recovery to the upside? How many more weeks have we got?
Like 178 days. And it looks like we're putting in a bottom now. So another 178 days to December. But this is really loose, guys. I'm not a Forex specialist. I'm not a Dixie specialist. I'm just kind of forecasting based on what I can see off of price patterns. And these things like to make shapes. They like to break these trend lines. This is a perfect trend line. The rules of a trend line, you cannot go through a candle body. Wicks are fine. You can go through wicks, but you can't go through a candle body like this. You can't do that. It's just because, well, when does it end? It never does. So this right here, they knew this trend line was here, and they knew exactly what they were doing. Loads and loads of shorts, came in at this level. This is why I think in like a market maker, and because everyone can see this trend line. We're on a daily time frame here. This stuff is not rocket science. You're not the only person seeing this stuff, and people like to jump. And Bitcoin does the same thing. People like to jump in at these trend lines, and it's like you're supposed to be taking moves not that I take moves on Dixie, but you're supposed to be taking moves in general at like highs and lows, and that's easier said than done. But you know, jumping in a short right here at a low. The short was supposed to be taken right here, not at the trend line break, because it's an obvious trend line on the daily. You
Hmm.
kind of got to know what you're working with. So that's
Hmm.
all I got for Dixie.
Okay, cool. All right, guys. So our next pair is the Nasdaq, and the Nasdaq, again, it's pretty straightforward for me. I think you know we will cool off into this box next week. There will be a small pullback back to test the Bollinger maximum, which is sitting at 22,193. And then we'll continue going up. If you step into the daily chart, you can see here, um, you know, we we are kind of we've come down. So we've gone up, come down, going up again, come down, going up again, and now we are being rejected off the KC channel, right? So being rejected off the KC channel. Here we managed to pierce through. Here we managed to pierce through on the daily chart, but here we could not. All right, and we've tried to go back a bit, being rejected. So logically, I think we'll come and test this. This is the 20 middle of the KC channel. So we'll probably come and test that. And then we'll be rocketing off again into the distance. So that's what I'm seeing on the NASDAQ. And I'm going to pass it over to James to share his thoughts as well.
I'm ready. Yeah, so I'll break it down in the weekly. I think the past 2 weeks we've kind of been on the daily, but just to remind you guys where we're getting this bottom 1, 2, 3, 4 here. This one. These come from the bottom Bollinger touches on the weekly. So that's where those come from. I know it's been a couple of weeks, and you guys probably saw those 1, 2, 3, 4. Like, what is this guy talking about? We're talking about this lower Bollinger on a weekly, and this Bollinger is a 55 VWMA and at a 1.618 deviation. So let's go down to the daily just to kind of see what's going on. And we could see that we are grinding this upper Bollinger. It kind of looks, this is the first time in this small wave here that the Bollinger is starting to turn down. We could wait for confirmation on that. Monday open, we'll see what it's at. But if that's going to turn down, we could see some sideways prices and maybe even a VWMA midline touch at 21.5. So just be aware, but overall bullish and overall expecting 25,000 on an NQ1 in probably early September of this year. And from that position, we'll be looking for a short to ride down to around 22.5. So that's all I got for NASDAQ. Were you saying something?
All right, guys. So our next pair is the SPX, and SPX is very similar to the Nasdaq. So we kind of let me just make this bigger. So we kind of ride in the KC channel, right? Close above, go higher. Now we are below the KC channel. So I expect a pullback similar to the Nasdaq as well. So a pullback to around this somewhere in this box. It could just be to the top of the Bollinger, which is sitting around 6199 at the moment, or it could come into obviously the 20, the middle of the KC channel, and at that point we will hopefully get some support and continue the leg to the upside. I don't think this is stopping anytime soon. Best case scenario, worst case scenario is to test these tops. That's it. We're coming to test these tops again. And then we're just sitting around the 6118. So, I wouldn't expect us to go below that. And the Bollinger is sitting at 6077 on the weekly chart. So that's all probably maximum worst case scenario I'd expect. And we'll be rocketing the other way again. The easiest way to pick that on a Monday or a Tuesday, if you step it up to like 15 minutes or so, what you see, what you would see is something like this, right? So, oh, come on, we don't want that. What you would see is something like this. So, you should be looking for something like this. As price comes down, comes down, you're gonna see something like this, right? Which is like, you know, here you form like a base somewhere here, and then you go lower, and then you go lower, but then the RSI keeps rising up, and then you rise up, and then you will see a swipe back like this, and normally you get strong volume. So if you see something like that on 15 minutes Monday, Tuesday, don't be expecting any more falling. That's the end of the fall, and we'll be going up. So let's leave that, and James will share his thoughts as well.
Yep. So we have S&P E-mini futures on the left and NASDAQ E-mini futures on the right. Um, we have a 38% recovery off of that move on the NASDAQ, and we have a 29% recovery off that move off the S&P. If we look at recent days here, we are still up, glued to the upper Bollinger Band on S&P as of present day. We are glued, whereas NASDAQ, we're kind of starting to move away a bit. So NASDAQ is a bit more volatile, but the moves are still true. I think S&P is going to set the path for NASDAQ, and NASDAQ is just going to get all the brunt end of it because the S&P is probably going to be the one that opens green, and then NASDAQ will follow. And how it looks on the charts, S&P looks stronger and more poised for a bullish move, whereas NASDAQ kind of looks like it's heading away from its upper Bollinger and kind of waiting for S&P to start the move. So it's going to start to sell off a bit, I'm sure. Some tech has bad earnings, and they're kind of just looking at its big brother to kind of make this move. I know the percentages don't necessarily equate that, but as far as present day Bollinger, I'm liking this S&P chart a lot more. So that's all I got.
All right, guys, our next pair is gold. So if we bring it to the weekly chart quickly, you can see gold. Last week we had a divergence between here and here. And this week we kind of retested it and confirmed it to a degree. So I'm a little bit more, on the back on the side that, okay, we will probably go and do a double top on gold or slightly higher before we have a proper collapse, because we still haven't had the necessary drops that we need to have on gold. The liquidity which is sitting here below this candle here is quite big. So I think we'll come for it, and we'll probably even come and test the tops here at some point in the future very soon. So for now, I think we'll go up into this box. If you step into the daily chart, you can see that we've kind of dropped there, went up, dropped here, gone up, dropped here, right? And that's three drops for me. So, and then we did a kind of a retrace back to the scene of the crime. And yeah, I was kind of expecting it to come in here and take some of this liquidity, but we didn't. So this is all we got. And now this looks bullish to me based on the setup here. It looks bullish. So I think we do a double top or slightly higher. And then after that, we'll see how the pattern looks like. But if I'm forecasting, I think we'll probably just do a double top and then come back down. So I'm gonna leave that with James to share his thoughts as well. He's been quite bullish on gold for a while, so credit to him.
Yeah, so I think we're in this accumulation zone right now. Um, as we're getting ready, another just to kind of touch on what we saw from Dixie is the trend line break. As we saw here, both of these blue lines we can kind of use, but this one is probably a little easier to see. So we have a trend line, trend line, trend line, and it's been building for a while. Even from back here, we got a trend line. So it's going, 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 and then we break it, the shorts pile in, and that's going to give us that boost to move on in between, something like this. You can't really tell. I would say anywhere from 3,700 to 4,000 before things start to cool off. This thing could go parabolic for all I know. Uh, this extension is off of this low created here at 2681 up to the high at about 3,015 and then down to the low at 2905. So again, accumulation in the one zone of the Fibonacci and a perfect ping off of the 1.618 right here. I mean, it doesn't get any more perfect than that. Knowing how to use Fibonacci's correctly is so big. It's very simple, but it's kind of hard to learn at first. But there's your 1.618, and then we drop down to the one ping. I think I said something to you guys before about like something like this that happens, and I didn't have like the chart to show it happening, but here you go. This is kind of what we see. And we move up towards the 2.618 range. I mean, this looks like a hourly Bitcoin chart. So that's all I got for gold.
All right, guys, our next pair is Bitcoin, and I'm going to start off with the CME futures chart. And you can see we have a gap between here, and here. There's a gap. Okay, and when we get to the Binance perpetual chart, you will also see we've gapped them up. We're currently around, I think, 119 or 118 or whatever it is. So we definitely, they closed at 119,450. So if we go higher than that, we'll gap them up, right? So currently, I don't think we are there yet. Um, but if we go higher, which I think we will probably go higher to maybe 120 on the Binance perpetual chart, then hopefully we'll be gapping them, right? So when they come back, they're gonna run it back in, and I'm sure when they run it back down, they're gonna run it to close this gap, which sits around the Bollinger, and the Bollinger is what 114226 on their chart. So this is on the daily chart. So, but it's bullish, right? We closed outside the KC channel. We're gonna go at the very least. I expect 2 to 3 weeks of upward action on Bitcoin. So next week after the pullback, we're gonna go higher, maybe to 125, 126. The following week, we're gonna go higher to maybe 130. Then the following week, we'll go higher again. Maybe you might finish at 135 before we then come back down and actually do a proper correction, maybe back up to maybe around the 110, 111. And that's when, people will really get scared because by the time we get to 135, everybody's so excited about, okay, we're going to 120, 180, 200,000, forgetting there's a major pullback before we continue the journey to the upside. So let's step into the actual Binance perpetual chart and see what's going on there. Um, so on this chart, you can see, where we are currently. So uh, we are at 118,500, and we went as high as 119,655. So it couldn't be any precise. 119,655, and the CME chart 119. So we basically went higher. So they will have a gap unless we run it back down anyway. So we've gapped them up already. So yeah, I think whether we get the 120, if you step it, I think if you want to find out, you probably have to step to like 4 hours. It depends on the close of this candle. If this candle closes as it is now, we'll go up higher. If it closes red, then that's the end of it, and you're gonna have your pullback, right? So if you step into 1 hour, yeah, we have an inverted sort of candle, so which means people have taken shorts and they are sitting pretty here. And I think this thing will run it back up again. It'll run it back up again to close to kind of knock them off. Unless, of course, the 4 hours changes completely red, then yes, we may have a small bounce back up to maybe the middle of the week, somewhere like that. And then, then continue our leg to the downside for the pullback. So that's what I've got on Bitcoin. There's a lot of goodness here. All the pullbacks are opportunities for you to buy. It's not you don't need to be get scared about, Bitcoin going to 110K or 100,000 or 90,000. On balance or probability, 80% probability is not going to happen. So that's all I've got, and I'll pass it over to James.
Yeah, so always important to zoom out, just kind of get a broader picture here. We have an accumulation of from October of 2021 to April of 2024. So that's huge. That's that's what's playing out right now, this big accumulation zone. So let's get into kind of let's zoom in, get into like the hourly, maybe the 4 hour. Let's see what's going on to make sure there's nothing left on the table for Bitcoin market makers or Bitcoin itself to want to take. And what we could see is we have abnormal volume threshold break and we have unfilled orders. That is signified by these volume candles breaking this red line. That means it's unusual price movement, it's unusual volume, and Bitcoin does not like to leave things on the table. It will always revert to its mean. And it shows you when it's getting ready to do that because the chaos in the volume, and you could see it by this red threshold break. So what that means is price has to return to these candles that created this threshold break because price is now unstable. What we can also do is use the days of the week to kind of see
Um,
where we are.
I've got a quick question, James, before you continue.
Yep, no
Are
problem.
there
What's up?
any of these breaks which haven't been recovered back when we were at, say, 15K?
I mean,
Are
yeah,
they like
sure. There,
they are kind of like your areas of interest, but not necessarily meaning that price will go there, right?
no, it's like 95%, 97% recovery rate.
Right. Okay. I mean, I'll do some study on that. I'll do a study on that
Yeah, I
later,
mean, you
and I'll
can,
post it. Yeah. Okay.
there's
Sorry.
more.
Sorry to
Yeah,
interrupt
no
you.
problem. It's it's not necessarily like, oh, it's going to happen tomorrow. Price could continue higher. Like I said, on the daily time frame, we built up a 3 year accumulation period. I'm not going to sit here and call a top on Bitcoin right now. But what we're looking at is when we go down to the hourly, just to see where price wants to go in the short term, where Bitcoin's magnetizing forces are. And uh just like over here, when we had our blue box around, what was it? I think it was this candle here got recovered here. And then that's when we started this next move up. Oh, it was here. We were waiting, waiting, waiting. This candle, this blue vertical line threshold break, we were waiting. We were like, oh, we're gonna go higher. It's not gonna happen because there's money left on the table. And Bitcoin, it's just not gonna happen. Not on the hourly chart, not on the perpetuals chart. It's just an edge that we have over the market makers and they can't do anything about it. We dipped into it right here and it gave us so much force. It propelled us up. Even I thought that, price was going to continue higher. But, that's why we use take profits, we use stop losses, and we don't get greedy. You take your money off the table when you're in profit. So what happened 2 Sundays ago, we came down and we completely filled the blue box. So what I suspect will happen here is the same thing that happened here just because of the recency of it all. It's kind of the same thing printing out. What we're going to do is we're going to put in maybe a week or two of upwards trends. We could take the bar pattern from this move and overlay it to present day, and it's the same thing over and over. They show their hand and they just repeat the same thing. We're consolidating at these levels, but we're still in a bull market. We're kind of ranging out. This is some of the best stuff to trade. This is when people like me make most of their money when we're range trading because you can't make money in a market. At least I can't. I mean, if you want to hodl or if you want to hold Bitcoin, awesome. That's not financial advice, but that's good for you. But I'm a trader, and there isn't much going on right here in this area when we're moving throughout. There's not a lot. It's a lot of people getting wiped out, a lot of volatility, a lot of volume getting taken off the market, put back on the market. But the range trading, when Bitcoin's printing on our PVSRA map on the bottom, and you can look back and you could see that every single candle has been recovered. It's an easy play. Maybe if we weren't tracking it from all the way back here on the 8th of May, and I said it was going to get recovered, and we dipped up, and then we completely filled it. If I didn't have a back order of all this stuff, if I didn't have a backlog of being right about all of these candles being recovered, I wouldn't be so adamant about it, but it's going to happen. And it's so obvious now that we can even overlay the bar pattern. I was calling 116. Why was I calling 116? Because when you overlay the bar pattern, that's where it took us. You know, so that's what I'm forecasting. Kind of putting in a top here. Let's see what day we made the top over on this edge here. Let's see. Thursday, Friday. So kind of a Friday consolidation. We rolled over. Thursday, Monday through or Tuesday through Thursday is kind of a decision making time for Bitcoin. So just be on a watch out for that day. And like Kenny said, Monday fake out maybe. So, expecting this to get bid up to who knows where. God only knows. I'm not going to sit here and be like, oh, 116, oh, 120, 122. No disrespect to people that do that, but I have no idea. But I will say that I'm suspecting that it turns around and heads back down and recovers some of this liquidity left on the table. So that's all I got for Bitcoin.